Friday's US employment report came in much better than expected. US companies added 312,000 workers to their payrolls in December, well above the 184,000 expected. In addition, two prior releases were revised up by a total of 54,000. Equity markets, which were already bouncing sharply on news that US-China trade talks would take place this week, surged higher. Meanwhile, FX markets were relatively subdued until they heard comments from Federal Reserve Chair Jerome Powell. As far as investors were concerned, these were decidedly dovish. Mr. Powell said the Fed wouldn't hesitate to change balance sheet policy if needed. And this could be a key point for the fate of the US dollar in the short to mid-term. Mr. Powell now appears to be pivoting away from last month's hawkish Fed statement and upbeat FOMC quarterly summary, and this could take away some of the recent support for the greenback. We may learn more from the FOMC minutes this Wednesday. By the end of last week, the dollar-yen had recouped much of Thursday's losses, while the Aussie dollar rallied almost 5% from that week's lows. Going forward, Brexit will be a hot topic once again. Over the weekend, UK Prime Minister Theresa May insisted that a meaningful vote would take place in January, but she wouldn't be drawn on a precise date. So once again, moves in sterling dollar will be headline driven for now. It's worth noting also that Fed Chair Powell is due to speak on Thursday, and the US Consumer Price Index will be released on Friday. During last week's turmoil, the sterling-dollar pair tested long-term trend support and managed to get a decent bounce. Cable has started the week positively, with traders eyeing 128 on the upside. But any negative Brexit headlines could see bullishness evaporate quickly. The weekly chart suggests that the pound could recover against the US dollar in the coming weeks, but we'll need to see a break and consolidation above the 128.50-129 area for a more substantial rally. Bulls will also want the pair to hold above the 126-126.50 area. The Euro USD has bounced off support around 113 and is now testing resistance around 114.30 to 114.50. The next level of resistance comes in around 115. Early on Friday, gold pushed up towards $1,300 an ounce to trade as its highest level since last June. Gold is now up around 8% since mid-November, while the dollar index has only lost 2% over the same period. In the short term, support comes in around 1275 to 1280, and below there, sellers will target 1250 or even 1240. There's some solid resistance around 1295 to 1300, but this could be broken if we see another slump in global equities and a big risk-off move. Hope you all have a great week.